My name is Andrew Stotts, and I want to welcome you to the Valuation Masterclass debate. These debates are made for students to practice their presentations, but also for you and I to think about, should we be buying or selling that company? And the company today is TSMC. And I'm going to just do a little bit of background on TSMC before we get started. And let's look at that. There's TSMC, and looks amazing inside. It's of course, a Taiwanese multinational, and it's the world's largest dedicated semiconductor foundry, and it manufactures advanced logic chips for leading global technology companies like Apple, NVIDIA, and AMD, Qualcomm, and it operates a global network of fabrication plants across Taiwan, US, and Asia, serving customers in over 40 countries. So it has 15 major manufacturing sites, and the first thing it has is advanced fabrication plants, or what we call fabs, and it's high volume facilities producing leading edge and mature chips. Then they have specialty and back-end facilities, which is advanced packaging, testing, and R&D supporting core fabs. And then they have global customer and service design service offices with embedded technical teams working with customer engineers. So they do a huge amount of work to support their customers in their designs. So the company has a strong geographic footprint. Taiwan, of course, is its core manufacturing base. And the US now has Arizona fabrication and technology centers supporting strategic customers. That's recently been set up. And then China, it has mature node fabrication and customer support operations. In Japan and Europe, specialty technology, automotive, and customer service presence across multiple countries. Now, I would take a moment just to talk about this geographic aspect. Over the years, the company, everybody was perfectly satisfied for it to sit in Taiwan and do its work. But when politics started revving up over the last 5-7 years or so, the companies had to make sure that they're expanding across the globe so that they can provide services to different countries and different regions. And of course, they don't want to get cut out of the US in particular. So that type of expansion is the type of thing we want to learn about in this debate and how it determines the valuation of the company. So now, TSMC's biggest moat is its unmatched manufacturing scale and process leadership. Advanced node dominance, massive capital investment, and decades of customer trust create switching costs that are nearly impossible to overcome. So let's look a little bit more deeply. Revenue comes from semi-production manufacturing. It's 100% pure play foundry model. It does not design its own chips. It works with its clients. So advanced process technologies is 60% of its revenue, and mature nodes is 40% of revenue. When we think about the most advanced stuff, we're talking about 3 nanometer, 4 nanometer. These are some really, really, tiny devices or semiconductors used for devices like smartphones and the like. Now, the stock price has shown strong upward momentum since mid-2025 after a period of consolidation. So again, when we're thinking about, should we buy this? Should we sell this? This gives us a little picture of what's been happening with the stock price. And now, consensus right now basically shows a buy at about, let's say there's 37 analysts covering the company, and 12 of them have a strong buy and 24 have a buy. There's really there's no sells. In fact, a hold, just one hold. So you can say that the market is very, very positive on this stock. It's got an average about 17.5% upside. And when it comes to growth, the market's looking at 20% or so growth in 2026, 2027 at a net margin of 43.5%. Think about that for just a minute. A 40% net profit margin. This is one of the most profitable companies in the world. And it's just a manufacturing company. That's fascinating. Look at Apple. Apple has a net profit margin of 30%, but they're not a manufacturing company. They're a design company, basically, and they outsource to manufacturing. But TSMC has achieved something incredible. When you look at the average net profit margin in the world, it's about 6%. So 40% is just unbelievable of what this company has been able to achieve. So, world-class benchmarking scorecard that I use to look at the performance of any company relative to its global peers shows that the company is financially world-class. Its profitable growth score is a 1 or 2, mainly ones, and it's driven mainly by profitability, which is driven mainly by expense control. And that expense control is the margin. Growth is reasonable. It's going to be a little bit more volatile, but still not bad. And in the past 12 months, growth has been ranked as a 2 out of 10, which is a very strong result. Let's have a look at TSMC on the global stock tracker. If you don't have the global stock tracker, make sure that you get it. You just scan that QR code and it will come to you every single Monday morning. And you'll be able to look at TSMC as well as 500 other stocks. So let's look at it in just a little bit more detail. And I'm going to zoom back in on that in 1 second. So we can see that the market capitalization of the company is about $1.2 trillion. Average daily volume is about $1.4 billion. The net profit margin, as I mentioned before, is about 40%. The return on assets is an incredible 25%. And when we look at the PE, it's 24%. Not that expensive compared to NVIDIA or Broadcom or ASML Holdings. And a price to book of about 8%. Not bad. I wouldn't say that it's that expensive. EPS momentum has been strong. Earnings are going up by about 53% over the past 3 months. And price has been going up about 21% over the past 3 months. None of these companies in this sector have any debt because they have so much cash. And if we look at the beta, it's 0.5, meaning that when the market goes up by 1, this company only goes up by 0.5. This gives us a great picture of what's happening with the company and where things are at. Now, let's meet Surya, one of our students. He's a risk and valuation professional with 6 years of experience in credit risk and corporate banking and 3 years in risk consulting. He's worked with Tier 1 global investment banks on non-market risk and UK and US regulation with expertise in credit analysis, valuation, and risk quantification. And he is the buyer, the person who is saying to sell this is Pruitt, and Pruitt is a finance professional, graduate from Thammasat University, and a CFA Level 2 candidate with a strong interest in investment banking and private equity. He's currently working as an assistant fund manager and has hands-on experience in investment analysis, valuation, and data-driven research. Whoa, we got some guys that have really done a huge amount of work on this. And let's review the debate rules, and then we'll get started. First of all, we have opening arguments. Each participant gets 3 minutes to present their case. And then we'll have a rebuttal round where each side has 3 minutes to counter the opponent's arguments. And then we'll have a Q&A session that's about 6 minutes where participants will answer questions from me and the live audience. We do have some people on the audience right now that are making some comments. I see Roman's out there. Good to see you, Roman. And we also see Lee's out there and also Momin's out there. So your fan club's out there and they're ready to go. And then we're going to have closing statements and then we'll wrap it up. So I think we're ready to let the games begin. I'm going to bring them into the room right now. So, and there they are. Surya, Pruitt, how are you guys doing?
Very great. Very great.
So you heard the presentation I just did to the audience about where TSMC is. It's kind of interesting to see how high the profitability is, yet it's not that expensive compared to NVIDIA and others. So that could be an argument that, hey, we're not buying that expensive compared to what you'd buy some of these other ones for. But then you could also counter that, well, there's a lot more risks involved with this company and da-da-da. So I'm really excited to, you guys both have done presentations last time, 2 weeks ago. So was that 1 week ago?
Yeah, last week.
Yeah, geez, time flies.
Last
week, and I know you've done a lot of work to get to this point, and so I'm gonna get us started. Any questions before we get started?
No, I'm okay.
All right. Good. So we're going to start off with you, Surya, and you're going to have 3 minutes for your opening argument. The first thing I'm going to do is I'm going to take Pruitt out of the screen here. 1 second. So that's going to give you the chance to present your argument. I'm going to leave in just a second, and then I'll come back right when it gets close to 3 minutes. You ready?
Yeah, I'm ready.
Take it away.
Okay. AI is everything. If you have any questions in your mind, can AI solve this problem? If you can think it, then it is 100% sure it will be solved by using AI sooner or later. This drives TSMC's value further. Hi, my name is Surya. My call for today is TSMC with a buy recommendation. TSMC manufactures chips for customers who using their designs and specifications, acting solely as a foundry. To come to this conclusion, I have three key story points, and let's deep dive into these story points. AI adoption would be the main revenue growth driver. Business of all kinds have begun using generative AI to enhance operational efficiency. Their focus on AI is the business of TSMC. The server market and networking infrastructure market are expected to grow at a CAGR of 12% and 6% respectively globally by 2030. Labor shortage is a global challenge. A humanoid robot is the solution. It works 7,000 hours annually, while human works only 2,000 hours. Microprocessors, including GPUs, would drive product growth. There is an undersupply of chips. In the near term, GPUs and SBM demand exceeds supply. NVIDIA alone is utilizing approximately 70% of the TSMC's CoWoS packaging capacity. DRAM vendors have invested more than 20 billion in SBM related funding in 2025 to increase wafer capacity. However, demand still exceeds supply. Leading edge 2nm processor node would drive competitive advantage. TSMC's 2nm capacity is fully booked until the end of 2026. Apple's A20 and A20 Pro are the driving force when it comes to adoption in 2026. Qualcomm, MediaTek, Apple, AMD are the known clients for 2nm process node, and iPhone maker has already secured more than half of the TSMC initial capacity, which would help the company to fix price at a higher level. So, considering these all, I expect TSMC's revenue would grow by 35% in 2025 and 2026, and then normalize to 25% in the rest of the projected period until 2029. Gross margin would be maintained at 57%. This leads to target price of Taiwan dollar 1,866, an upside of 28% from the current price. So I recommend buy. Thank you.
Excellent. All right. It's AI adoption is just crazy when you think about what's happening. You also mentioned an undersupply of chips, which is an interesting factor. And I've got questions on that, but I think I'm going to leave it at that because we'll come back to Q&A. But excellent opening, and now we're going to bring in Pruitt and let him give his opening statements. So, all right.
Okay.
Pruitt, you ready?
Yeah, I'm ready.
Okay, so just take your time. I'm going to exit, and I'll start the timer as soon as you start talking.
Okay.
All right. Whoops, I'm leaving now.
So my recommendation is on sales size. Thank you for Surya. So a lot of detail that's in a good side, but let me tell you about the bad side that you might never heard before. So my first story is about the AI inability to monetization. You can imagine I got the number of $432 billion of AI market cap by using the 1.8 billion ID user of ChatGPT, Gemini, and any others AI services that provide time with $20 per month as a revenue as a subscription price and time 12, which is 12 month. And the number that's going to come out is 432 US billion dollar. However, the reality number in this case we found out that's only $12 billion. So it's reflect only like conversion rate only 3%. So my question is on the demand side on B2C in this inability to correct and make the customer to pay for the service has a very essential utility required. So this is the first case. And the second case is about the incoming of Intel XEA infrastructure. You can imagine that NVIDIA is one of the biggest customer to TSMC. However, remember that Intel is buy a stock in NVIDIA is buy stock in Intel around 5 billion US dollar, and it means that Intel it means that Nvidia would like to play this game much more in detail. So that's it, and it will steal the revenue share from TSMC. And the last one is about the B2B market. According to McKinsey number, only 10% of enterprise have successful scale Gen AI, and even they can deliver 2.5x on RYC. But the problem is about the hallucination or the trust of the data that generate by AI. So let me lap up and summarize what is the reason by on sales side. First is about the unable to monetization in AI for B2C. Second will be the Intel 18A with that can steal TSMC market share into nanometer chip. Third will be the AI for B2B that seem to be totally unpredictable and demand still unreliable. So that would be the case that I recommend to sell.
Excellent. Okay, so now I'm going to switch us out here. Hold on, I'll bring in Surya just for a second. Okay, so well done. And before we go to the next round, let me just introduce, we are now going to go into the rebuttal round. And the rebuttal round is where guys are able to rebuild your arguments and counter the arguments of the opponents. And so let me just do that now. And we're going to start with Surya. So I'm going to remove Pruitt out of there. And Surya, why don't you start your rebuttal round?
Sure.
Whoops.
Thank you, Fred, for your arguments. However, I'm afraid, my friend, I can't agree with your arguments. Will the demand for chips slow down? Short answer is no, because AI adoption rate is increasing and demand is higher than supply. I don't think AI monetization gap will slow down chips demand, because chips demand is driven by computational power used by businesses, cloud providers, and governments, not run by large scale workloads. The governments to run large scale workloads, not by consumers who pay US $20 per month. Similarly, hyperscalers such as Microsoft, Google, Amazon, Meta are spending tens of billions in capex, regardless of short term consumer monetization. This is not a short term game. This is not a short term game. Even if consumer AI monetization lags, data training, data inference, and AI infrastructure build out continues to grow, which is exactly where TSMC's revenue comes from. So I am not agree with your first argument. Similarly, will Intel's 18A market share be gone? That means will Intel's 18A take market share of TSMC? No, definitely not. TSMC is already fully booked till the end of 2026. Intel's 18A is unproven at scale, while TSMC's 3nm and 2nm node are already in volume production and are fully booked. Consumers prioritize yield, reliability, and ecosystem, not node name. Similarly, Intel is trying to make its own chips. At the same time, it is trying to manufacture chips for others. That makes customers cautious about sharing their design with the direct competitors. So Intel can't take market share. I disagree with this point as well. Yeah, these are my some counter arguments for your arguments, dear friend Fred.
Okay, great. So AI demand won't slow down. The 18A won't take market share. And also, there's the risk of giving business to Intel, which is making your chip and competing chips. So, okay, excellent. Well done. And I'm going to bring in Pruitt now and let him do his counter. So, all right, I'll start the timer as soon as you start talking.
Okay, so thank you for your argument. I love it. But However, as I keep coming out with a number, B2C is okay. You might find that okay. I don't care about that. There's a government. There's a big company out there, but let me remind you that when you invest a lot of money in other company and you have the skin to the game, do you gonna still use TSMC uh, as your producer or not? Because right now you have a game changer in microchip, and as I would like to mention that TSMC is not a technology developer; they only produce for their customer, but Intel they only buy the high-end EUV machine to the company. So it means that that is a game big change that they design it, they produce it, and the CEO is a created is come from as a Credent Design, and he was CEO of Credent Design. So this software is the main part of TSMC software. So you can imagine that he gonna be a top class to produce chip. So that's the game changer. However, demand for NVIDIA might slow down because I think NVIDIA will ship to Intel infrastructure. And even you mentioned in your second story that about the DAM part, the memory part. So most of the market is held by the South Korea, and they can produce their own chips. So I think you might dig down a bit. There's a part that South Korea have a strong foundation of foundry sector. So this will be the second focus. And the nanometer chip in the future, okay, is remarkable according to the demand. But however, how do you know that TSMC gonna be able to? Of course, they can be able to produce, but with the game changing of technology, TSMC don't have ability to create a technology. They only produce a chip. So my question is that I see a big company did that doing nothing and die from the business, which is Nokia. And my question is on that: have you ever seen TSMC invest cash in the software company? Have you ever heard that they use cash to other reason? They mostly hold cash, but what the benefit of cash? They cannot build a return. They cannot ship you to another dimension. They only give you the liquidity, and you have liquidity on Earth, but you don't have any growth in the future. So that's it. I think TSMC is lacking of the future parts. You can mention that.
All right. So, interesting about you mentioned about the CEO of Intel coming from the design company that does the designs for TSMC,
Yes.
which
I
I
don't
was
know. I mean, Intel.
okay. And also you mentioned about South Korea having, the capacity of foundries.
Yes.
Interesting. Yep. Okay, let's now bring Surya back in. 1 second. Okay. So now we have reached the Q&A session, and in the Q&A session, we're going to have 6 minutes of questions. We do have questions coming in, and so I'm going to go through those questions. Remember that this Valuation Masterclass debate is sponsored by the Valuation Masterclass Bootcamp, where you can become a valuation expert in months, not years. So, and these guys are demonstrating it, that's for sure. All right, so we're going to move into the Q&A. I just want to set the timer. And I would say, unless a question is directed at you, just start answering it. If it pertains to you, feel free to just, start going on that question. So let's look at some of the questions that we got. So the first question is AI demand sustainable or a bubble?
For me, it's a bubble.
Okay.
I take these questions.
Yeah.
And I say it is sustainable. The reason is, as I mentioned in my opening statement, everything is artificial intelligence now. Smart city, medical is smart, telemedicine, and we are here debating each other on a platform that is also part of AI. So everything is AI, then how can we say it is not sustainable? And how can we say bubble? So it is 100%, it is sustainable.
Okay,
Okay,
so
in my side,
yep,
okay,
go
I
ahead, go
have
ahead.
the opinion. I have
Yep,
the
yep.
opinion that's. Do you remember the revenue structure of TSMC? That's only 14% is IoT and another. I mean, it's a sum of automobile and the IoT. So the main part still as the SPC and the smartphone. So the thing is that you might think that's around us, but of course it's a very big chip like 7 nanometer, and the most important part is about 3 to 5 nanometer chip. But however, I mean, it looks strong, but in real life, we pretend just like a first step toward. And the thing is like too over, like a bubble. That's more I'm asking.
Okay, let's keep moving, and then we'll go to the next one. If a major customer tries to build their own chips or use multiple supplier, how secure is long-term demand? You know, you do hear this news coming out about Amazon and Microsoft, and it's all of a sudden, does that mean that everybody can make a chip and TSMC is just going to be left in dust?
Okay,
Go
I
ahead.
take these questions.
Yep, yep.
Yeah, they can build their own chips, but remember, building a chips is not a short-term game. You know, we have to. That means company have to invest a lot on research and development, and after if this get succeed in the research and development, then also they have to invest huge amount of time to manufacture it. It is not just like a trading business, buying from somewhere and selling to other. It's not. It is
Mm.
manufacturing, and it is the technology manufacturing, not just making rice and something like that. This is not that easy. So it takes time. So do other customers manufacturing affect the demand of TSMC? No, because TSMC is already a market leader with 65% market share. And the nearest competitor who have market share is less than 10%. So it is almost impossible.
Okay. Let's go to the next question, and this is for you, Surya. According to Allianz and DBS Bank, China will be self-sufficient for 50 to 60% of its local chip production by 2030, with local champion SMIC leading the way. How will TSMC mitigate that risk?
Yeah, really interesting questions.
Mm-hmm.
Yeah. Yeah, TSMC, I already mentioned in the previous question answers section as well. TSMC is the market leader with 65%. And 65%, for example, if the nearest competitor, another, let's say, 50% and 60% local chip production by 2030, it will be in 2030, not tomorrow or not in 2025 and 2026. It takes time. By the time, I believe TSMC do even better, and even they being aggressive when their competitors are growing. That means they will develop some strategy to tackle on that, to tackle their competitors strategy as well. So I don't think it will be impact in the short run. So TSMC will be still a market leader, and that doesn't affect
Okay.
TSMC in the short run.
And Pruitt, you have any thoughts on that?
Well, I've been the local champions SMCI on the way to SMC. I don't think so. I agree with him that SMCI is not a challenger for TSMC in this case. But however, I strongly believe in Intel and also I mean in Samsung and SK Hynix that I think you didn't mention that much, but the Samsung and SK Hynix hold like 75% of market share of the RAM part, and they have the ability to produce their own chip. So it means that in the future they can buy the EU machine from ASML, and that will cause a significant loss on TSMC revenue. And also, I don't. You can imagine that when Trump tried to push the American first policy, so it means that you can imagine in the future the Broadcom also is a chip designer will try to correct with Intel. So I strongly believe we're gonna have the picture like that.
Okay, so we've got, maybe it's not SMIC, but you think there could be more competition coming let's look at some other questions. If TSMC, this is from Arush, says, if TSMC must keep spending more each year just to maintain the lead, how do you ensure future returns don't fall despite higher revenue? You know, how
Okay. Okay, I'll go for this. This is a very significant part because the secret behind TSMC is about the top tier engineer that they can deliver 80 to 90% of the success rate of the yield. So imagine that you produce you use one wafer to produce 100 chips, right? The success rate of TSMC is 80% to 90%, so they can manage the margin by the quality compared to other person. However, they didn't mention anything that protect the top tier engineer to stay with them. So that's the problem that TSMC top management never speak, and they never tell you that they're gonna lose the top engineer. And with the Trump ministry, that they try to pull the TSMC top engineer to US. Right now, imagine you are the top tier engineer and you have a chance to stay in US. Okay, let's say Trump send you a golden card. You can access to anything as like nearly to be the American citizen. So would you gonna change to US or not? Would you gonna stay at Taiwan and afraid of China to invest someday or not? So that's also play a crucial part for the safety for the top tier engineer.
Okay, so we're almost out of time, but we have a question left for each of you. So for Surya,
Okay.
this is a follow-up from Roman saying Qualcomm and Texas Instruments were early investors in SMIC and are major clients for mature nodes. What is TSMC's customer retention plan? What is their relationship there, and what are your thoughts about that?
Yeah, thank you, Roman, for the questions again. Customer retention plan is solid in case of TSMC, because the customers doesn't only shift because they are cheaper or because they are just more advanced in the name, but the customers think how strong they are. For example, TSMC's scale, culture, and long-term incentives that long-term investment and long-term service they are providing to their customers that helps to retain the customers for the longer period. So I don't think it will affect TSMC in the short run.
Okay, and Pruitt, you just got a little bit of time to answer this. Would you see Apple making a switch to another foundry such as Samsung? Apple is known for switching around. Intel and Samsung produced the first iPhones. Any thoughts on that?
Okay, and my thought is about they're gonna stick with TSMC around 2 or 3 years, but in the future, with the Trump administration, try to build the American first, and also remember that the U.S. government also invests in 10% of stake of Intel, so they will try to force Apple in any way to use Intel infrastructure in the future for sure.
Okay, so we're going to go into closing arguments, and we're going to start with Surya. So let's go into that. And hold on one second. Remove that. Surya, you got 3 minutes, and I'll start the clock as soon as you start talking.
Yeah, thank you, Fred, and thank you, Andrew, for this opportunity. And especially thanks to Fred for your arguments. I'm really happy, and I got a chance to know something which I haven't looked it before about TSMC. So it's conclusion. At a conclusion, I really enjoyed this opportunity debating with my friend Fred. Thank you. Thank you, Prit, for your arguments again. So, the whole discussion comes down to a single point, that is, semiconductors are the backbone of artificial intelligence infrastructure. Demand is driven by enterprise data centers, hyperscaler capex, not by consumer subscriptions. The demand is real and growing. At the same time, GPUs, SBM, and advanced packaging remain undersupplied, giving TSMC strong pricing power. Most importantly, TSMC's 2nm capacity is already fully booked through 2026 by customers like Apple, AMD, and Qualcomm. That provides revenue visibility and reinforces that technology leads. Risks around Intel, talent, short-term monetization are just speculative. TSMC's execution, customer trust, and capacity leadership are the facts. So, considering these all facts, I strongly say it is a buy, and TSMC is a good company, and it adds value in the future. Thank you.
Excellent. All right. Now we are ready for your arguments, Pruitt.
Let's see.
Take it away. Go ahead. Whoops. May have lost him there. There we go. Coming back. Little technical difficulty.
I mean,
Okay, you gotta start again.
okay, sorry
Yep.
about that. I
Yep.
try to fix this. I don't know why, but there's the light out around my place.
Okay.
So anyway, because my recommendation is on sales side, as coming from the demand from B2C, it seemed to be very low, and B2B it seemed to be unreliable with the success rate only like 20% in agentic AI. And the second thing is about the demand of Nvidia is might be changed because they have a chance to invest in Intel. You might imagine like a TPU from Google, but of course in the future they will try to produce back in US. On the memory part, most of the company is in South Korea. You can imagine 75% of global market, which come from Samsung and SK Hynix. But however, as I mentioned, that they can produce their own chips, so TSMC will not gonna be a producer for them in any short term. The 2 nanometer chip is a great and remarkable future. However, TSMC is a producer, and most of the product is building according to customer demand. However,
Whoop. Unfortunately, got cut off. Hold on, bringing him back in.
okay, so the nanometer chip is a great and remarkable future. However, TSMC is a producer, not an inventor. So my question always lies on if you can remember Nokia is died because doing nothing, but in case of TSMC, they have a cash. They never invest in something that they own use, but they never like go to other way. They're just a producer, and in the future, everyone should be try to be a producer with the inventor, and that case will bring the end to TSMC. So my recommendation is on the sales side with 1,220 Taiwan dollar. I love this one, and thank you Surya for his buy side and coming out with a great information.
Excellent. Just hold on. So there it is, the debate. Surya's on the buy angle, and Pruitt is saying that you should sell it if you own it. This was a fun debate, and it's been excellent watching them learn. So let's bring them back into the room here and chat for a little bit. All right, the debate is over, and how do you guys feel?
Intention.
Yeah, I'm feeling great.
Electric intention.
Yeah. How do you feel compared to the last week's presentation?
I love how we share the point of view. We have different like thinking, but whatever we try to do is bring the best to investor and also everyone who listen to this part. We might come with a different part, but I think we give everything that investor need. So sometimes I would like to be a bad guy, but I want to remind you that sometimes a dream might not become true. So remind for your dream.
And what about you, Surya? How are you feeling compared to where you were last week?
Yeah, actually, comparing last weeks, I even get more, you know, information about TSMC. I dig more deep,
Mm.
more deep, and then got some, really interesting, ideas what TSMC is doing, that actually it was really exciting to do that.
Yeah, it's the debates are always fun because it's a little bit more relaxed in the sense that you're not all pumped up, worried about your presentation. So I enjoy it. But yes, it was good, and we had some good questions. And here, let's see. We got some nice comments. Momin said, "Well done, lads," and Lee said, "Well done, guys. Great TSMC debate." And we got another one who says, "Intense and great debate. Well done, and keep on rocking. And great job." And even Roman said, look at his tough questions. He said, great and valuable insights from both sides. Great questions from Roman, a boot camp graduate from Boot Camp 15, and he's on top of these things. So it's great to see that participation. All right, I'm going to see you guys in the Slack channel. So I'm going to let you go now. It is New Year's Eve, so it's 6:30 here and 6:40 here in beautiful Bangkok. I'm going to go sit down with my mom for a little bit and ring in the new year. Well, we're probably going to be in bed by 8 p.m., but, all that. So
Happy New Year to all. Happy New Year.
Happy New Year to everyone.
See you
Sorry
guys.
about that.
Yep.
I just got accident around my face.
Yep. So that was it. A great debate. A lot of different topics going over. I really enjoyed it, and hopefully you learned from it. If you want to build a competitive advantage in company valuation, join us in the next Valuation Masterclass Bootcamp, and that is happening in February of 2026. 2026, I hope, for you is going to be an